Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. The question of the day is, of all the cryptocurrencies that we have right now, you have to choose one and only one that you would choose to accumulate forever. Which coin would you choose to accumulate forever out of the 10,000 plus cryptocurrencies that we have right now? And without any further ado, let's jump right into it. You should all know exactly what time it is. The cryptocurrency market is focusing quite heavily on two main events. They are namely, and I'll batch this one into one gigantic ball. It is the Ethereum Dencon ETF staking upgrade event, all one thing, and the Bitcoin halving. We have continued to receive a large amount of news over the course of the last few months now regarding the amount of accumulation of Bitcoin and exactly how it's far outstripping the supply. We started getting this around, first of all, backing it up, we've actually had this for a while. Even before the ETFs were a thing, I think that it just becomes more sensationalized when you can say that Fidelity, BlackRock, Grayscale, blah, 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 are all accumulating tons of coins, as opposed to many times before in the past where we have received news that other companies and other whale wallets were accumulating large amounts of Bitcoin. Now it becomes more of a, in no uncertain terms, a physical thing, air quotes, because we can now see which companies are doing it besides just MicroStrategy. I also present to you a number of, once again, terribly written articles. So a lot of times I'll go through them, and if you hear me get a bit flustered, it's because it's just not written well. Famous cryptocurrency analyst, his name is Willy Woo. His latest analysis indicates that despite recent selling pressure, and there wasn't any real selling pressure, a lot of people, for some reason, were like funny, wrote really negative things online about Bitcoin going from 52,000 back to 50,000. Like, has Bitcoin lost its steam? Has it lost its luster? And it's like, no, it's just a normal pullback in price. Things don't and cannot go up forever. It is a mathematical uncertainty. Like, it just is not going to be a thing. So of course the price goes back down to retest if that is our new bottom price, and therefore so we can move back up once again. So the selling pressure was mainly that, people trying to take profits and seeing if 50,000 was the new base. The demand and supply dynamics for Bitcoin are largely in favor of the world's largest cryptocurrency. According to Woo's analysis, the daily Bitcoin demand has risen to 13 times the actual daily production. Why is this interesting? Because we heard similar numbers a couple of weeks ago, not even pertaining to the actual normal demand for Bitcoin. For those of you who might have missed it, the news that we received is that initially there are currently now 900 Bitcoin that are mined and created per day. We got news that the ETF issuers were accumulating around 1,800 Bitcoin per day. Everyone was like, they're taking twice the supply of what's actually being created. And then we got news that that was 5 times the supply. And then we heard that just Fidelity and BlackRock alone, they were accumulating 9,000 Bitcoin per day. Just 2 companies were doing 10x the actual supply. And then I made sure to let everyone know, a lot of times when I've seen articles about this, they make it seem as if BlackRock and Fidelity are just going up to these mining companies and saying they're shaking someone's hand and taking all the Bitcoin that they've mined that day. That's not how it works. The people who are mining Bitcoin only sell off the Bitcoin that they need to keep the lights on, the electricity bill that they have. The rest are accumulated for them and their clients. So it's usually like 1/8, if not less, of the Bitcoin that's being created by these companies that actually ends up going on to the market. Therefore, that means that Grayscale, BlackRock, Fidelity, iShares, you name it, are accumulating probably around 40 to 50 times the amount of Bitcoin that's actually being created, because a lot of it, nearly all of it, isn't re-entering back into the market. Those are only the accumulation numbers from those ETF companies. And then we had news that they were apparently, the inflows began to increase for the ETF companies. We initially heard numbers around 200 million, and then it was 400 million, and then we heard $500 million per day in inflows. That is to say, the money flowing into the ETFs had reached $500 million, $500 million per day. And then that was increased to around 600 million as well. So continuing on, according to Wu's analysis, the daily Bitcoin demand has risen 13 times the amount that's actually being produced. Experienced cryptocurrency analyst Macronaut, predicts a rise for the cryptocurrency's price, that is Bitcoin, that could reach $270,000 just based off of these numbers, the demand and supply dynamics. Keeping in mind, once again, just to lightly breeze over it, 900 Bitcoin created per day. There's around, I think the last number we had was around 10,300 that are being accumulated by Fidelity and BlackRock alone daily. 900 created, 10,300 accumulated. 900 new coins are not entering the circulating supply per day. It is probably around 100 to maybe 150, as the other coins are kept by the people who are mining. 10,300. That doesn't even get us to the total number of all 11 spot Bitcoin ETFs in total. It is a dramatically high number of how much they're accumulating. The next step in the equation is that this does not count normal people. Everyone else on the planet is still accumulating. There are still people who have weekly and bi-weekly and monthly buy orders. That 13 times that we got that Fidelity and BlackRock are accumulating does not count you into the equation. The supply crunch is real, and it's going to take a lot of people by surprise. This is why we've seen Bitcoin's price rising so quickly. It's because it does not take a lot of money to actually move the price. The buying that we're seeing, a lot of it is also happening over the counter from many crypto exchanges, and people don't really understand how little there actually is left. And this is why we see a lot of these companies, I want to say, accumulating in silence. But this is why they're not buying directly from exchanges, because they know that if you buy $500 million per day on Coinbase, like through their website, Bitcoin is going to rise quick. But if you buy from Coinbase over the counter and it does not enter their metrics and their systems, when people start, you understand what I'm saying. It's very different metrics, but you want to be able to buy when no one's paying attention, or when you have the money to be able to not actually influence the other metrics. According to Wu's findings, the Bitcoin network sees a significant inflow of about $670 million in new investor demand per day. And that is compared to the $46 million per day that's actually being created. $46 million per day being created. The demand is $670 million daily. The situation reveals the profound impact on the price dynamics of the largest cryptocurrency. It says especially with 60 days left into the halving. I think it's around 40. I don't know where they got 60 from, but it's definitely around 40 something, if not less. which will reduce the new supply pressure by 50%. For those of you who also didn't see the other numbers about 2 weeks ago, it wasn't Willy Woo, it was some other analyst, the people who are always in the news. He was saying that people aren't ready for the halving because they don't understand that the demand is not going to remain the same. It is going to increase. So 2 things. If you have on the side of Fidelity and BlackRock, if they are currently mathematically buying 13 times the amount of coins that are being produced, when the halving is only 450 coins per day, they will be accumulating 26x what's daily being created by the network. Put that number into your mind. 26 times more than is actually being created. We are also going to see the amount of coins hitting the actual crypto exchanges also decrease as well as the price rises. So those 450 will not be hitting crypto exchanges on a daily basis. It is probably going to be 25 or 50 coins, maybe less, that actually ends up hitting the marketplaces. 26 times for those 2 companies, not a lot from the actual people who are mining it, is probably going to be, stay with me here, 52 to around 75 times what's actually being created. Is everyone understanding how I'm getting to those numbers? Because I've said stuff before and I try to say them as slow as possible. And I see people arguing in the comment section about like I didn't explain it, or and I you know, you get it right. If they're doing 13x and the halving happens, it doubles. Their demand doubles to 26x. All of that Bitcoin is not hitting the market from the people mining it. Therefore, it is going to be 50 to 75x what Bitcoin is actually being created, and that's just those 2 companies. Keeping in mind that that's not factoring in you or your friends or the other millions of people on the planet who are also buying and who will be buying even more when we pass by the previous all-time high. This is how you get to those $600,000 price predictions, because people are looking and they're like, the demand is destroying the supply. It has far, 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 far outpaced it. And that's where you get a $270,000 Bitcoin just based off of those numbers. Nothing else. That's not factoring anyone else who might also join. Anyone who's like, I'm late, I have to throw $1 million into this. Don't forget, there are countries who are also buying Bitcoin. People keep forgetting a lot of these things. Everyone focuses very heavily just on the news of, I mean, even right now, of the price. And then we hear some days about like inflows. But no one's paying attention to how significant these inflows actually are. Yes, very, very, I think you get it. It's just more of a, please continue to pay attention. So once we get near the halving, nearer to the halving, things are going to pick up as always. What's going to be interesting is after the halving, and this is the thing that I usually wait for as well, people who try to sell the news. It is going to be a very rough day for them when they realize exactly what's going on, because a lot of people who try to do these things are people, not that they're uninformed per se, but it's people trying to, have you ever met someone who tells you that they're going to get into the stock market and then they try and day trade and they realize they can't day trade because that's not, you have to like really know what's going on with a lot of the market metrics, and you also need like millions of dollars to be able to like actually catch any of these movements. You have to be like constantly looking at the news. So a lot of people who try to sell the news during cryptocurrency events usually end up losing money because they think it's literally, okay, the halving happened, let me sell. They're not looking at the metric, like they're not looking at the movements, they're not looking at the buy or sell orders or what the news is saying. Yeah, that's the demand is far higher than the supply. Without saying a number, are other people out there buying right now? I always wonder if people are buying, especially after hearing a lot of this news that we have going on. Because before in the past, there were a lot of, on this channel, I would ask that question in 2017 and people said, no, they weren't buying. People weren't buying Bitcoin. They weren't buying Ether. And a lot of people weren't buying XRP. A lot of people didn't buy XRP until it was like, I think like 30 or 40 cents. It was a really weird time to be in the market. Yeah. That's the I really hope you're paying attention news. Okie dokie. Let's move on. I assumed this news would have been far more popular. People tend to gravitate very heavily to stuff like this. A Spanish telephone company called Telefónica has announced a new partnership with Chainlink to provide secure connections for Web3 smart contracts. We have not heard about Chainlink in a very long while. It's one of those altcoins that years ago was incredibly popular that I never paid attention to because a lot of other coins were already using the idea of, and I air quote here, linking chains together or sharing information and stuff like that. It was very common, but Chainlink became really popular and then hasn't kind of been in the news in the last year or so. In a recent press release, the company highlighted plans and they focused on GSMA Open Gateway API security with blockchain technology at the forefront. According to the release, the partnership will secure the operations of telecommunications networks to connect any API to Polygon's network. Okay. It says, and I quote, "This collaboration marks a significant step in targeting telco capabilities into the blockchain industry and demonstrates the need for secure Oracle networks to deliver real-world data on-chain. This interconnected ecosystem enhances the functionality and security of Web3 applications, contributing to a more robust and verifiable digital landscape. Consequently, as the telecom world moves towards increased GSMA integration in order to bolster developer tools to deploy services, security becomes paramount. Significant changes, Web3, efficiency, security. Chainlink oracles that connect blockchain data to real-world data results in fully automated decisions and can be utilized by telcos to prevent fraud and secure accounts." And they talk about SIM swapping and stuff and Chainlink. I wonder why was Polygon's network introduced in that sentence as well? I don't know. Cool. So we've heard a bit before from other companies who are going to be using other blockchains for their systems, for their data, for being able to send information back and forth. We have heard actually a lot about Polygon. It's the first time that we're hearing about Chainlink. There was one other coin. There was one other coin about a year ago who also announced a partnership with some type of a telecom company, if you will. I just simply assumed that this news would have been a lot more popular, as Chainlink was extremely popular in the past. We were told that it would be the next Ethereum. But cool. Very interesting to see that despite not being in the news, they can still have a partnership like this. Let's see if any more companies jump onto the bandwagon and begin to use a lot of these chains for their systems. That's the Chainlink news. Haven't heard that in a while. And yeah, let's move on. Also in surprising news, not really, an analysis of Bitcoin distribution supply on Sentiment has showed a notable accumulation trend among whales. Examining the chart, it was evident that whales holding between 1,000 and 10,000 Bitcoin witnessed an increase in their holdings from 24 to 25%. This upward trend commenced around 22nd of January and has persisted until the present. Over the past 10 days, these wallets accumulated. Over the last 10 days, these, it's very important. 10 days is not a lot. Accumulated around 100,000 BTC, equivalent to roughly around $5 billion US. There's been a lot of whale news. I haven't had any on this channel in a while. I've spoken about the whale news, but haven't actually shown a lot of it. Yes, whales have continued to accumulate. They've been doing so for a while. The same exact thing with Ethereum. There has been some altcoin accumulation news, not including Ethereum in that sentence. But I've checked it out, and a lot of these websites where the news would be that they saw that one wallet accumulated around $4 million of an altcoin that no one has really heard of and or is not popular anymore. And 4 million, sadly to say, does not a whale make. So while it is a significant number in the real world, a lot of people tend to focus on the heavy accumulation. There's a big difference between hundreds, if not thousands, of wallets between 1,000 to 10,000 Bitcoin who accumulated $5 billion as opposed to one lowly wallet that accumulated $4 million of an altcoin in an effort to try and get into the news, to try and get people to think that the coin was more popular than it actually is. Yeah, the accumulation can... I'm very interested to see where all of this ends up going. Like, I can't stress that enough. It is very fascinating to see that the space has evolved in this... Don't know if you heard that. I have very rude neighbors. Has moved so quickly over the course of the last few years. And like, this news is actually unprecedented. We've never had news like this before. We've had whale news, but it's never in this manner. We've had accumulation news, but it's never been this intense. We've had like supply crunch news, but it's in the idea that, like, you know, there's not two companies who are accumulating 1% of all Bitcoin every 4 weeks, like that kind of thing. So yeah, whales continue to buy, and they will continue to do so. That's the Bitcoin whale news. Let's move on. So this one to me was lightly dystopian. We're going to go through it together, and you're going to tell me if I got it wrong, because maybe I'm not understanding something, because I feel like I am, but I also feel like no. U.S. banking giants are writing a joint letter to the United States Securities and Exchange Commission, arguing for spot Bitcoin exchange traded fund custodianship. Pretty easy, right? The large banks want to be able to custody Bitcoin and spot Bitcoin ETFs through their platforms. Cool. The letter, which was sent on Valentine's Day by 4 industry leaders, addresses the SEC Chairman Gary Gensler and is asking him to modify a law passed in 2022 called SAB number 121 that regulates cryptocurrency custodianship in light of several key developments, such as the approval of spot market Bitcoin ETFs. Everyone still with me? So apparently 4 large banks, we don't know who as far as I can tell, sent a letter to Gary Gensler asking him to change the law SAB number 121 to allow them to be able to hold Bitcoin. Cool. All on the same page? Awesome. According to Tom Reuters, SAB 121 forces entities safeguarding digital assets to present them on their balance sheet at a fair value. So what I gathered from a lot of the news, and I compiled all the information together, is that apparently the law from the SEC, the law is SAB number 121, says that if you are holding digital assets, if you are holding cryptocurrencies, you need to present them on your balance sheet. Cool. And you need to show what the value of those assets are. Nothing more difficult than that. It literally says, if you are Coinbase, you need to say what coins you're holding and how much they're worth. If you are a bank, you need to show what coins you're holding and how much they're worth. Everyone with me? Cool. However, the Bank Policy Institute American, the Bankers Association, the Financial Services Forum, and the Securities Industry and Financial Markets Association all say that the law is hindering them from their ability to participate. They're saying that for some reason, because of this law, that they can't actively custody crypto. They said, and I quote, "Since SAB 121 was issued in 2022, the associations have articulated their concerns regarding the bulletin to the commission, both in writing and in meetings with commission staff. The foremost concern identified and discussed is how the on-balance sheet requirement of SAB 121 negatively impacts U.S. bank organizations and investors due to the associated prudential implications. The associations have underscored that on-balance sheet treatment will preclude highly regulated banking organizations from providing a custodial solution for digital assets at scale." Everyone got that? The banking associations have said, well, they don't want to have to show how much crypto they have. They don't want to have to show the actual value of the assets that they're holding, as banks are not forced to do so. For those of you who do not know, the banking system in general around the world and also within the United States, they are not forced to adhere to the same rules as everyone else. They are capable of producing and creating US dollars at will by creating debt in some form and then telling the Fed about it, and then that new money ends up being created. The things that are on their balance sheets as banks, they wish to actually have completely secret. No, we are the bank, therefore we have the information. This is not something that is to be made public. Do you remember back in good old 2008, 2009, and also you've seen it around the world as well, when people had literal bank runs and they ran to the bank to get their money out, and the bank was like, we're going to close the gates now and have these people standing outside holding large pieces of metal in their hands. Yeah, bye. And they close the gates. That's because banks don't actually have all the money that they say that they have on their balance sheets. The idea is that they're expecting that people will not coordinatedly at the same timely all run to the bank to try and take their money out, because that money does not exist. It is not there in physical form and people cannot have it. It is not inside the machines. It is not inside the actual building. So one of the main issue is, years and years ago, that was taught to me by many of the early people within the cryptocurrency space, is that eventually banks would try to get into the cryptocurrency space. It's a given. When there's tons of money, when it's something that they don't control, that they want to control, they're going to try to get into it. The problem is that other banks around the world who have gotten into cryptocurrencies, remember how we've heard before how they had to go through took 3, 4, 5 years to get tons and tons of paperwork. And this is how we knew that there were other banks who had exposure to Bitcoin, who were buying Bitcoin. You were here for the videos because I always bring you that kind of news. The other idea is that if you do not have to make that information public as to what your assets are explicitly to anyone, well, you as a bank could buy 1,000 Bitcoin. And then you start saying, hey, we're going to lend out some of our Bitcoin, or you can lend us your Bitcoin, and, have a whole debt thing going on. Something like you can get a mortgage in Bitcoin if you so choose. Well, the problem is that bank only has 1,000 Bitcoin, but they're lending out debt against that Bitcoin as if they had 100,000 Bitcoin, the same exact way that the banking system currently works right now. You can create debt for money that you don't have that ends up being created by the Fed. So imagine hearing that there's a law that says, in no uncertain terms, if you wish to hold crypto or digital assets, please make sure that all you have to do is present them on the balance sheet and show their fair market value. Now imagine the bankers associations coming forward and being like, that's incredibly unreasonable. We don't like the sound of that, and we would love if you changed it so that we could get into the cryptocurrency market. Because what happens when we get into a situation where people begin to add up all these numbers and they go through the actual balance sheets the quarterly balance sheets of around, let's say, like 85 different banks on the planet. 85 banks, random number, but it makes sense. 85 banks who have all been accumulating Bitcoin. We don't know how much. They don't have it on their balance sheet. But at some point, we see that quarterly, they're issuing debt against the Bitcoin that they say that they have or other people have that ends up amounting to, let's say $14 trillion. Well, the problem is that Bitcoin's market cap is around like $17 trillion. So how are you every quarter issuing nearly all the Bitcoin in debt? Are you then saying that you have more Bitcoin than you actually have? What does that sound like? What is that? That's the current system that we have right now. Right. I saw, and this is the kind of news that should be more popular, but never will be. And I don't know if it's the factors of people simply don't care that these people are trying to destroy Bitcoin. I've noticed a lot of times, a lot of people aren't worried about and or do not care that these large entities have gotten into the space and they're trying to basically control it when they should not have any control over it. That is to say, whenever I mention and I talk about this level of accumulation, I do it, and now it's going to sound a little cheesy, I do it for your benefit in that if you know that this is going to be the future and these people are accumulating the future, what does that mean for your future if you don't have this item? What happens when we allow I physically and mentally cannot stop BlackRock and Fidelity from getting into the space, but I can alert you to the fact that these people expect Bitcoin to go to several $1 million per coin. This is why they're accumulating all of it right now. Do we want to continuously live in a world where the people who got us into the 2008 crisis control Bitcoin? Bitcoin is for the people. This is why I always make sure to mention, if at any given time you feel like doing so, it could be time to reevaluate your portfolio just in case you think it might be time to add more of an asset that might be taking over the world. Yeah. Really weird news story. I found this in only like about 2 different places. But yeah, American banks, or rather American banking associations, are trying to get into crypto. But now I don't say this often, but the SEC law makes a lot of sense. It is not that difficult. Like, one of the main founding principles of the blockchain is actually transparency. While you may be able to use it at your whim without other people knowing, we as a collective still have the information publicly as to how much Bitcoin is moving around, how much is currently out there. There isn't a situation where someone has 100 Bitcoin and says, well, I'm going to loan out 10,000 Bitcoin. You cannot do it. It cannot be done. Yeah, really weird. It's almost like, I don't know. I was going to say, like, it's almost like they don't learn, but the banks don't want to learn because they control everything. If you control the world, why would you need to learn about the world and or have better policies? Because if things break again because of you, well, you're shielded. You still have all the money. You still have all the assets, but that's another conversation for another time. Yeah, that's the, there's a law, and the banking associations are trying to get around it so that they could basically accumulate cryptocurrencies, not have to tell anyone, and then issue debt against them, basically doing a brand new extra digital form of rehypothecation, which is just so much fun. I do sincerely hope that you have all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.